Hello, traders. It is Wednesday, the 3rd of October, 2018. Did I just blow your ears out or speakers out? Thanks for joining me again. It's 8:03 a.m. Chicago time, where the weather flip-flops every day now that we're in the fall. One day it's pretty cold, one day it's pretty hot, but it's still a beautiful city. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The sentiment today is very clearly risk on. This is based on news out of Italy that they're going to reduce their 2020 deficit or budget and expenditures after a bunch of EU ministers yesterday came out and spoke negatively of the move that they were going to make or had threatened to make, which is to increase the budget threefold or something like that. So we saw that news at about little before 9 p.m. Central, 10 p.m. Eastern. We saw a quick pop across the markets and have been running up since. So definitely risk on. The Euro stocks leading the pack up 1%, 1.04%. It's near highs. It's just 3 points from highs. NASDAQ up 0.45%. Crude is flat, basically trading just up 3 cents. The DAX is closed. It's German Unity Day today. So that market's closed. And gold is teetering on unchanged, is only down about 80 cents with the bonds lagging down 20 ticks. So that's where we stand. You know, like I said, risk on for today. We have a gap up in the S&P, gapping right into the point of control from Monday, the day when we sold off on that SCOTUS press conference and so on after breaking higher on the agreement with Canada and Mexico, the trade agreement between the U.S., Canada, and Mexico. So that's what's up so far. Looking at what's ahead of us, we got ADP this morning. It was relatively good. We do get U.S. PMI services final, but the number to pay attention to is the ISM non-manufacturing, which comes in at 10 a.m. Eastern time, expecting 58, prior's 58.5. Today is a parade of Fed speakers. It started at 6:30 Eastern with Fed's Evans, and then 8:05 Eastern we had Fed speaker Barkin. At 1 o'clock Eastern we have Harker. At 2 o'clock we have Brainerd. At 2:15 we have Mester, and then the big kahuna at 4 o'clock today, Fed Chairman Powell is on a moderated discussion in Washington. No pre-release text, so the market might respond there since he's not putting out what his comments are going to be. So that's today. We also have oil today. So today's fairly busy, I would say, in terms of what's on deck to be released. Let's take a look at yesterday's expectations. Doesn't seem so sharp. Let's see. So yesterday's expectation is pretty straightforward. As you see here, pre-market plan for the day was for it to pull back to around 22.50, 23, and then to push up to 36, expected to move higher to be predominant. And then if it still had some strength in it, I put this arrow up right here to say that the next area to test would be 29.39, or the next likely area to test will be 29.39. And so that's what played out, except that we sold off also. We ended up turning over and selling off. Here's what actually happened. So remember what this looks like. So we pull back to 24. So we're ahead of that 23, 22 half area before we get our first impulse up And we ended up pushing to 36 on the nose. And this is where, again, this is what we expected, right? Without the circles. This is what we expected, a push down that then gets impulsive. See this impulse here? And then continuation to 36. That's what was expected. Here's what we got. Open auction, moves down, impulse, boom. And then second impulse, boom. 36. Do I sound like that cooking guy who puts spices on food and goes, I think he says, bam. And then from there was very interesting order flow action on this drop. Those of you who are part of Convergent, you should find the recording yesterday from the impromptu from the afternoon to look at how that's set up. I discussed this thoroughly. If you look at how things looked like, just fabulous structure here as the market pushes to that 36, pushes again, but weaker, starts to rotate down, gets a little more buying force, and then again pushes to the high. Also, again, a weaker test, but a weaker negative test higher, and then it starts to trade down, and it's a squeeze. It's a squeeze. Look at it. It trades quite a bit across all these levels. A lot of volume going off. Totally battled its way down. And the expectation, and I think the impromptu, we were up here, and I had said that if it falls below the mid, that it's likely to squeeze into the point of control, which is right here. And then from there, it is likely to squeeze longs, late longs, because these guys are absorbing, buying. And so they're likely, as it squeezes lower, they're likely to become sellers. And then more buyers are likely to step in to absorb as well. And that pretty much worked out that way all the way back down to 29.24, giving us a double bottom on the day. And then from there, it just started to float up. These charts can be found on ctcharts.pro. It's Linsoft's IRT, in case you're curious. It's called the volume scope. So that's what we've got. We ended up with a double bottom yesterday and a triple top, a legit triple top, according to the parameters that I use. So a very, very much arrested day. Multi-distributions, but the value area is valid for this session. And value high is at 29.32, and that's if we push back into 36 and through 36, the expected target is 32 for today. So that's what we got yesterday. Here's the big picture. Bam, reversal, pull back, new all-time highs, consolidate, break out, fall back in, inside day. So this is where we are. We have an inside day to the breakout day. The next move is very, very likely to be to the top side, 46.50. As I talked about, I believe on Monday, 46.50 is on deck. We're not able to keep prices down below. And as you can see, the composite's fairly thin in this area. Yes, we have high volume nodes and low volume nodes throughout, but the main story is that on down rotations, we're having a hard time sustaining those prices before we pop up. And again, we broke out of a complete consolidation here, top side, and have not infringed back and moved back into balance into the MC point of control here, which is 29.19. We're maintaining higher than 29.20. We have a gap up. This is very likely. What the market's signaling here is that it is auctioning upwards much more easily than down. Here's the overnight action. And by the way, I showed the Convergent crew an image of the news when it hit. This is when the news hit right here. It came across my feed. Came across my feed at 9 to 8:57. These are all Chicago time. Right there. That's the catalyst there, and what we had is the printed news. I mean, it was released, probably half a minute before this, but this is basically the catalyst. The Italian news is very clearly the catalyst for this area, since the time that this triggered is around that 8:56, 8:55 p.m. Chicago time. And from there, the market had its impulse. So we have a classic impulse, very high, tight consolidation, continuation move, collision near the top, and then consolidate until the European markets open. So the treasuries opened here and equities opened somewhere in here. And then from there, it's really just quite bullish all the way through. More and more volume. You can see the volume rising as we push higher. And that's more of a quote-unquote confirming kind of behavior. So that's how things are set up. It's 8:15. I need to get going. Plans for today? Plans for today. The primary scenario for today is classic. We're expecting the market's opening right here at, or at least trading right now at 38.39 against the point of control. The 36 is right at the low volume node. If you want to hear more about that, listen to yesterday's pre-open trader bite. And so what I'm looking for today, we're right in this big balance area on the breakout day. The expectation here is for an open auction out of range against this point of control. I'm looking for this to dip down, either hold the 36, and then start moving up, or push down into the 32. Either case, I'm willing to take a stab at this at the 36. But if that doesn't work out, I'll take the stop. That's fine. It's cool. Stops are not a bad thing. We're just wrong on this one trade. And then I'll look for another stab at 32 at my next stock zone. But in either case, I'm looking for the overnight high to be broken. I'm looking for it to balance out at this 42 for a little bit once it pokes through. So I'm looking for it to poke through, come back, balance out with a collision in the 42 area and above. And then I'm looking for it to start moving towards 46.50 for all-time highs. Okay, and the way we've been making all-time highs is we push up and then we sell off at the end of the session. That's the key scenario. If that scenario doesn't work and we see that the market opens, open auction, moves up, tests above, and then we have an impulse down. And I keep putting arrows on these. This is so key. Like, how do you know when to short, when to long? It's so key to pay attention to the rotations, like I talked about yesterday. I expect it to fall back down, get a small bounce at 36, consolidate, and then continue into 32, consolidate, and then aim for it to balance out at 28.50 or thereabouts, yesterday's value. And if it gets down here, there's a good chance it'll reach out to value low, which is about at 25.50. Okay, so that's the responsive selling model, whereas scenario one is the respond, find buyers. So advertise prices lower, find buyers, and then once buyers are found, we look for the impulse up. That's we don't have a trigger potentially at this point, and that's okay if we don't trigger before. But once we see an impulse up, then we're looking to join the long side for a push towards new all-time highs, and that could happen today. All right. I hope that all makes sense. I try to include as much detail as I can, but not too much. If you have questions, you can always reach me at futurestrader71.com/contact. or better yet, join Convergent and just be part of the conversation and ask questions there. Good luck today, and I'll catch you tomorrow morning. Take care.